Understanding the difference between growth and value investing could be the key to unlocking better performance. By the end of this video, you'll understand the key differences between these strategies, know how to choose the right approach for your goals, and even learn how to blend them for optimal results. In the stock market, investors have two primary investment approaches to consider: growth stocks and value stocks. Knowing the difference between these two helps you align your investments with your goals and how much risk you're willing to take. Let's start with growth stocks. These are the leaders of the stock market, the companies that are expected to expand rapidly, often trading at higher valuations. Think of them as those promising startups with big dreams. Take Tesla, for example. It's a classic growth stock, valued more for its future potential than its current profits. Growth stocks typically reinvest their earnings into innovation and expansion rather than paying dividends. They're the risk takers, the disruptors, often found in emerging or rapidly changing industries. But there's a catch. With higher potential rewards comes higher volatility. Now let's move on to value stocks. These are the hidden gems of the market, companies that appear undervalued based on their fundamentals. A prime example is Coca-Cola, a stable company with a long history of paying dividends. Value stocks often trade at lower price to earnings ratios and offer higher dividend yields. They're the stable investments of the stock market, found in more established industries. While they might not offer the same explosive growth potential, they can provide stability and income, especially during turbulent times. Now, let's talk about spotting those potential growth winners, finding the next big thing before everyone else does. It's not just about luck. There are some key things to look out for. We're talking about strong revenue growth, expanding market share, and innovative products that everyone's buzzing about. And it's not just about the numbers. Keep an eye on that return on equity. If it's high compared to others in the industry, you might be onto something good. But remember, these growth stocks often come with a premium price tag. So be prepared for a bit of a roller coaster ride if things don't go exactly as planned. It's about understanding your own financial goals and risk tolerance. If you're an investor who is comfortable with higher risk and potential volatility in exchange for the possibility of higher returns, growth stocks may be more suitable for your investment strategy. It typically offers the potential for significant capital appreciation, but comes with increased market fluctuations. On the other hand, if you prefer a more conservative investment approach with a focus on steady income and lower risk, value stocks might be more aligned with your investment goals. They often provide more stable returns and regular dividend payments, making them attractive for investors seeking consistent income and lower volatility. Your choice between growth and value stocks should be based on your personal risk tolerance, investment objectives, and overall financial situation. One good strategy is value investing. This strategy is all about identifying undervalued companies whose stock prices don't reflect their fundamental worth, distinguishing them from growth stocks. These investors focus on companies with strong fundamentals that the market hasn't fully recognized yet. Instead of chasing the latest trends, they look for tried and true businesses that are trading below their intrinsic value. To identify these opportunities, value investors rely on financial ratios such as price to earnings and price to book. Now, let's wrap this up with some practical tips. First, consider using index funds or ETFs that focus on growth or value strategies. They can be an easy way to gain exposure to these approaches. And finally, remember that the stock market, it's about sustained effort, not rapid results. Stay patient, stay informed, and always keep your long-term goals in sight. The key is to align your strategy with your personal financial goals. To dive even deeper into the differences of growth and value investing, don't forget to check out our blog post linked in the description below. It's fueled with additional insights, real-world examples, and practical tips that we couldn't fit into this video. Whether you're a beginner or an experienced investor, you'll find valuable information to help you make more informed investment decisions. Don't forget, the greater your expertise, the better prepared you'll be to navigate stock investments and possibly increase your gains.